The co-creators of Facebook, who were deceived by Mark Zuckerberg and the early Bitcoin adopters, has landed themselves in hot water with the Securities and Exchange Commission.
The SEC once again weighing in on crypto.
They are looking at the unregistered offer and sale of securities to U.S. retail investors.
The Winklevoss twins, Cameron and Tyler, started their cryptocurrency exchange Gemini in 2014 with the goal of building a trustworthy, user-friendly platform for buying, selling, and storing digital assets. They wanted to make it easier for individuals and institutions to participate in the crypto economy and bring greater stability and security to the market. The Winklevoss also aimed to promote wider adoption of cryptocurrencies by advocating for regulatory clarity and responsible practices in the industry. However, with the cryptocurrency sector in total chaos over the past few months, Gemini and its founders have encountered new challenges. The U.S. Commodity Futures Trading Commission charged Gemini in June 2022 for making material false or misleading statements as it sought approval for its Bitcoin futures product, and Gemini laid off 10% of its staff as the cryptocurrency market crashed.
Gemini Trust Company, the firm founded by the billionaire Winklevoss twins, is cutting another 10% of its workforce, adding to the wave of job cuts across the technology, fintech, and crypto industries at large.
Gemini's recent problems were caused by the early November collapse of cryptocurrency exchange FTX and sister trading firm Alameda Research. Gemini and Genesis were partners in its interest-bearing Earn product, and as a result, Gemini said it would have to freeze customer funds. Soon after, Genesis announced that customer withdrawals from its lending arm would be stopped due to the FTX impact, citing unprecedented market turmoil as the reason for being unable to continue business as usual.
But as we've seen before, this industry, one bankruptcy has often led to another.
The Financial Times reported in December that Genesis had $900 million in customer funds from the Gemini Earn program. According to Cameron Winklevoss, Digital Currency Group, which owns Genesis, Grayscale Investments, and other crypto firms, is experiencing liquidity issues, despite the fact that founder and CEO Barry Silbert has assured investors otherwise.
Cameron Winklevoss alleging here private lies and accounting fraud. And also in the same week that you have Barry Silbert, the head of Digital Currency Group, also reaching out to investors with a very large multi-page question and answer here that addresses how Digital Currency Group uses the proceeds of loans borrowed from Genesis Capital, the same asset here in question that is under the SEC review.
The private negotiations between Gemini and Genesis became public at the start of 2023 when Winklevoss penned an open letter to Silbert. In the letter, he accused Silbert of bad faith stall tactics in resolving the fund dispute, implying evasive tactics on the part of the DCG head. Silbert denies the allegations. The allegations heated up on January 10 when Cameron Winklevoss demanded Silbert to resign, alleging misrepresentation and accounting fraud at DCG. The company responded by calling Winklevoss claims another desperate and unconstructive publicity stunt by the Gemini founders, who were solely responsible for operating Gemini Earn and marketing the program to its customers.
The Winklevoss brothers have been waging a public fight against Genesis, even calling for Barry Silbert, the founder of the Digital Currency Group empire, to step down as its CEO. As Genesis's lending business entered bankruptcy, Gemini has been listed as its largest outside creditor, with the most money owed by a landslide. The Gemini Earn business has 340,000 customers of its own, and their withdrawals have been halted since November. Both of these companies are now under scrutiny by the SEC, with a lawsuit already against them. The question is how Gemini will get its money back.
Gemini then announced that it had officially terminated its Earn program, which it claimed would force Genesis to return over $900 million in customer funds. The program had been running for nearly 2 years as a collaboration between Gemini and Genesis. That situation remains unresolved, but now both Gemini and Genesis both face a new hurdle in the form of the SEC charges related to Gemini Earn, alleging that Genesis Global Capital and the crypto exchange Gemini were selling unregistered securities through Gemini Earn program that was supposed to give high interest payments on crypto deposits, raising billions of dollars worth of crypto in the process from hundreds of thousands of users. The SEC's lawsuit against Gemini and Genesis is part of a larger cryptocurrency crackdown by multiple U.S. government agencies following a sharp drop in cryptocurrency prices last year that exposed mostly retail investors to billions of dollars in losses. Tyler Winklevoss referred to the lawsuit as a parking ticket and promised to defend the company. The lawsuit is about a program called Gemini Earn, which allowed people to deposit their cryptocurrencies in exchange for a high interest rate of up to 4.29%. The cryptocurrencies would then be lent out by Gemini and Genesis to other investors.
Gemini had loaned some money to the digital currency group. It's not a direct loan. There's a promissory note involved, and it's kind of standard operating procedure to a degree. And the interest that was paid to these to the Gemini customers, along with many other customers, came from sort of an arbitrage opportunity that existed behind the scenes at some of Barry's subsidiaries, seemingly all above board. Until the dynamic changed.
However, the collapse of cryptocurrency prices last year forced many crypto lenders out of business, into bankruptcy, or forced them to drastically reduce their operations. Voyager Digital, Celsius, and FTX, whose founder was charged with fraud last month, were all platforms that engaged in various forms of deposit and lending. According to the SEC, Gemini Earn was effectively an offer and sale of securities and should have been registered with U.S. authorities. Furthermore, as cryptocurrency prices dropped sharply, Genesis was forced to halt withdrawals from its Gemini Earn program, and customers are now out approximately $900 million, according to the SEC. The SEC, under Chairman Gary Gensler, has argued for some time that they have the legal authority to regulate crypto, and they have largely used their lawsuit and enforcement powers to do so. Gensler said in a statement, "Today's charges build on previous actions to make clear to the marketplace and the investing public that crypto lending platforms and other intermediaries need to comply with our time-tested securities laws."
Genesis lawyers are saying they're working around the clock to reach a deal with the largest creditors, but there are complications. Gemini's borrowings were in part secured by shares of Grayscale's Bitcoin Trust, shares that were ultimately sold. The Genesis business disputes whether those sales satisfied agreements between the companies.
Tyler Winklevoss said on Twitter that the Gemini Earn program was regulated by the New York Department of Financial Services, and they had been in conversations with the SEC about Earn for more than a year and a half. He said the SEC did not have issues with the Earn program until withdrawals were paused in November during the aftermath of the FTX bankruptcy. Winklevoss also said, "We look forward to defending ourselves against this manufactured parking ticket, and we will make sure this doesn't distract us from the important recovery work we are doing."
There will be a lot of questions, both from investors as well as regulators, on where the money went, what kind of money was lost, how you get it back.
The cryptocurrency industry, its lobbyists, and its congressional allies have largely pushed for the smaller Commodity Futures Trading Commission to oversee crypto. It doesn't matter whether there is a regulation or not. The crypto industry is a wild west with a ticking bomb on the verge of exploding. To learn why, watch the video in the end screen.